Welcome to Fix and Fly, the business podcast, which identifies common business issues for you to watch out for in your day-to-day business life. So tune in every fortnight where we speak to leaders of corporates to SMEs where you can implement their strategies into your business. I'm your host, Larissa Logan from Fixity, where we help turn businesses around. Hi Mel, welcome to the Fix and Fly podcast. So glad you can join us today.
Oh, thanks, Larissa. I'm really happy to be here. It's an honour to be on your new podcast series and looking forward to some good conversation.
Thank you. So for our viewers that don't know you, do you mind giving us a 30-second overview of who you are and your experience?
Yeah, no problem. So I started at Deloitte in tax and then moved on to consulting. Went into banking when I first went over to the UK, ended up through the GFC working out some difficult leveraged and asset finance invoice discounting customers, doing some pretty cool stuff. It's the Icelandic bank that I worked for, went into receivership, which was an interesting kind of perspective to be in a business that was in trouble, and then came back to New Zealand, went back into banking here, looking after sort of stressed or distressed customers as well at ANZ, and then I went to and worked for Bridgewest Finance, where I ran a non-bank, and then started a startup fintech business, and recently moved across to Westpac.
So you've had a long 20-year career in banking and finance. You must have seen a lot over that time.
Yes, yeah, I've seen a lot, especially through the GFC over in the UK, just even down to people walking around with boxes being made redundant from jobs, the highs and the lows of the economy when it was going absolutely gangbusters to the crash. I've been through a couple of cycles now in New Zealand as well, and working with customers to try and help them turn their businesses around or provide better banking facilities so that they can come out the other side.
So are there any common themes that you've seen, say, between the GFC and now, where you've seen, common themes experienced with customers and businesses over this period?
Yeah, as the saying goes, cash is king. And I think if I am honest, a lot of businesses, they take their eye off the cash flow until it's absolutely desperate and they're looking to pay wages the next day. So keeping a temperature check on cash, whether it's in the good times or the bad times, is always a really important thing. I think if I was running a business, and I have run businesses, cash was everything. But that may be because of where I've come from in my experience.
And so what are some key strategies that you think business owners could take away with them and implement into their business today?
So strong financial support within your business. That might be a finance person that works in your business day to day, or it could be your accountant, not just a debit and credit accountant. I've always been a firm believer, having worked in an accounting firm, that it's all about using the historic information to look forward. So looking for those trends in the analysis, the data. And data is just incredibly important these days as well, to actually work out what you're going to do in your business. So I think the gut feel of business and making decisions is still there, but there's so much information that we can use, facts, data, analytics, to help you make those decisions. Sat on boards of some startup businesses sort of 3 to 5 years in to their journey, and watching them turn from a gut kind of decision-making business to a data-driven business was phenomenal. The growth that they got, the decision-making that was correct for that age and stage of the business was everything that, it wasn't everything, but like it went to their success.
Yeah, time and time again, I see common business issues, and one of those you've just touched on is making sure that the finance function has appropriate support and experience leading it. And the other piece is around reporting, because you can't fix what you can't see. And until you have appropriate reporting in place, it's very difficult to mitigate your risks going forward and to see what the landscape looks like for you, particularly given these tough economic conditions and times that we're in. So one of the kind of key areas that I work with my clients on is making sure that their reporting is up to date, and that's around like having a 13-week daily cash flow implemented, having a forecast, balance sheet, P&L for the year ahead. How important do you think that is for businesses to have in their business?
Absolutely important. The most important thing, though, is sitting down and analysing those forecasts. So it's not just about producing them. If the bank's asking you for that information, or if any other business advisor, it's not just to have it there because they want to tick the box. It's because they want to understand the businesses more, and that's exactly where businesses should be at as well. So looking at those forecasts and trying to look at the numbers and say, what story is it telling me about my business that can help me make decisions going forward? It could be, and that integration of finance into the whole business. So if you've got some stock that's been around for a couple of years, may still be good stock. No, it's not sort of old or stale stock. But you've got some cash flow problems within your business. So understanding when it is that you discount that stock, and there's a whole lot of other things around, cheapening your brand and selling things at discounts and race to the bottom that you need to think about as well. But for sales to understand the cash flow of the business and how important that is to discount or not at a particular point in time is really important. So understanding the numbers, what story is it telling you, and then focusing on how you make it work within the business, the whole business, not just kind of working in silos.
And I think cash and cash flow is almost a dirty word. People, it keeps them awake at night, but they don't want to talk about it, right?
Absolutely.
But it's fundamental to what keeps your business going. It's how you pay your wages, it's how you pay the landlord, it's how you buy your inventory. And time again, I see these businesses do not have the appropriate support in the finance function or their reporting to be able to really drive growth in their business.
Yeah, and I'd say I totally agree. But use the resources that are around you. If you're a business owner and you're worried about cash, or you just want to know more about it, so use those resources. So talk to your banker about your cash flow, your worries, your concerns. Talk to them about how you can make your cash flow within your business work better. And a small example of this could be you pay your interest to your bank on your bank debt on the 19th of the month, and your debtors pay you, or meant to pay you on the 20th of the month, and they may drop in dribs and drabs between the 20th and the 24th, 4 days late or something, and that's fine. But you're actually potentially borrowing money to pay your interest because of the timing of when their interest payment is for those days before your debtors pay you. So if you asked your bank to move your interest payment to, say, the 25th or the 28th of the month, then you'd get the money in from your debtors before you have that cash flow due out to your bank and interest payments. So it's about being really smart with cash, looking at your debtor payment terms, looking at your creditor payment terms, looking at whether you can have a trade finance line in there, for example. There's a lot of different solutions within a bank that you can use to help with cash flow. If you've got an overdraft and they're typically more expensive than a term loan, and you think, okay, well, we're in a downturn at the moment, so I need more overdraft, how about looking at some of that overdraft being put into like a 1-year term debt, and then your interest rate will be a bit less than having an overdraft, but you can still pay it down as and when you have that additional cash flow to be able to do it. There's invoice discounting, which is really good. There's equipment finance. If you look at some of our customers will come in and say, oh, well, I bought this piece of equipment and now I've run out of money, so I need an overdraft. Well, if we'd had that conversation earlier, we could have saved them sort of the hassle. I mean, you can retrospective do that in most cases, but if they'd just taken some equipment finance debt to finance that piece of equipment, and then they wouldn't need that. It wouldn't be coming to the bank saying, "I need that overdraft," right? And it's a cheaper form of financing. So there's the non-banks as well, and they're good for situations where you might need emergency cash, but they don't have the reputation that they used to have in the market, and part of that is the regulation that's around and things. But they are good. You just need to work out and to be quite clear on when you're actually going to repay that debt. It's expensive debt, and you want to know what your pathway is going from a non-bank and thinking hard about how you're going to get back to a bank so that you can minimise that interest cost.
There's some really great tips there. The first thing that comes to mind, and this is from real life examples of clients that I deal with, is quite often they're scared of the bank, right?
Yeah.
And that's they may not have the relationship that they probably should with the bank, and sometimes they're not fully transparent with which you've alluded to. What is your suggestion around how business owners should interact with their relationship with a bank to be able to support them with growth and any kind of challenges that they face with their cash flow?
Yeah, and I think cash flow is a problem for growth as well as sort of more stressed times, and I think it's great that you pull those both in together. If I was working in a business and I had debt, whether I was growing or whether I was going through a stressful period, I would suggest that you always use your banker for whatever you can use your banker for. They are an independent set of eyes. They often see things from above. They're never going to know your business as well as you know your business, but they can see things with a cold flannel, and step back and look into your business and see things quite independently and have an honest conversation with you about that. Bankers are bankers because they love people, they love finding out about businesses, they love helping, and they just want you to succeed. And I think if you think about it from that mindset, they're a free resource, they're knowledgeable, in a broad way across a business. So use them as much as you can. See your banker regularly just to check in and ask them what's going on in the economy, ask them for resources. Banks are big machines and they produce a lot of resources. So, ask them if they've got information to help you. And I'm sure they will. They'll help you as much as they can.
And I've found over my years with doing a lot of work for the banks and also working in the banks, that they are very knowledgeable about, various sectors, and it doesn't matter what sector you're in, you can always tap into that expertise. Yeah,
absolutely. And you know what? It's a view. They all have a view on something and you don't have to agree with it and you don't have to follow that view. It's your business and you're running your business, and that's the most important thing. But it'll just give you a different perspective to look at things on. They are there. You should always be on the same page. They want your business to succeed. They want your business to grow. And banks want to be like a trusted partner to your business.
So you've mentioned a number of great solutions, lending solutions that could unlock cash. One of the ones that businesses may not be aware of, some SMEs, is around that invoice financing. And I find that a really great way for businesses to unlock cash. Do you have any view around how this is used in New Zealand and whether, we should be using this more?
Yeah, good question. Invoice financing was my first foray into banking over in the UK, and it's a whole lot cheaper over there. It's relatively expensive here, but so if you're looking at it for your business, there's two different ways of looking at it, short term, and it can be a really good sort of self-funding way for short-term cash flow for your business. So, for example, it flows up and it flows down depending on your sales. So if your sales are high, then it gives you a little bit more cash. So you can use it for a short term, or you can use it for a long term. I'll talk about short term first. So short term, you may just have a whole lot of sales come in or forecast to come in, and you need to get resources into your business. So you can use that on a short term basis, and then it kind of when that order is fulfilled or orders are fulfilled and your sales drop back down again, obviously then that financing isn't available because it matches your debtor book. You can use it on a long-term basis, but if you're going to use it on a long-term basis, and I've seen plenty of businesses do it, you just need to ensure that you have adequate margins in your business to make sure you can sustain it and it is profitable.
And margins is a massive issue at the moment across all sectors, right?
Absolutely.
And I think we've seen huge price increases over the last few years, and maybe some businesses haven't passed those on. They didn't even realise what the value of those price increases would look like.
Absolutely.
And that's putting real pressure on margin. So are you seeing that with businesses that you're dealing with?
Yeah. Look, margin pressure is massive. We've all felt the cost of living increase, so even margins, not even in a business, right, in your day-to-day living, groceries and wages did come up for a bit, but they're not now. They're sort of stabilised for now. So it's okay if everything kind of goes up together, but we had the big jumps in the inflation and things. So that just wasn't working. It doesn't work for people and it doesn't work for businesses. So margin, keeping an eye on your margins is obviously something. The pressure that we see businesses with is the cost pressure and then not being able to pass that increase in costs onto their customers.
And I think that comes back to having appropriate reporting in place so you can actually understand what the value of these increased costs are. So you can do some analysis to figure out, well, if I need to pass this on, how much is it going to be? What does it look like?
Yeah, absolutely. And it's not just in times like we're in at the moment. It's for growth businesses as well, making sure that you know what the margins are in your business when you're growing. If you're bringing on a whole lot of more staff to fill a whole lot more contracts or produce more widgets, then obviously you need to understand whether that margin is better or worse as a result. And you never know. Like some business owners choose not to grow their businesses because that next level up, the margins aren't the same. It's a whole lot more risk for them as owners of businesses. It's a whole lot more work, and that's okay too. But if you're going to be growing your business, you need to understand the margins within your business and how they're tracking.
So you mentioned non-bank lenders earlier.
Mm-hmm.
I see a lot of that in the work that I do. What's your view on how businesses, SMEs, can use non-bank lenders to support them through a short period of time to kind of fund temporary debt? Yeah.
Well, I used to run a non-bank, so I know it very well. And then my fintech was around non-banks as well. So I would say have a conversation with your bank first as to how they can help you. And they might have other trade finance products. They might have, so insurance is something that we fund as well in advance. So there's lots of things within the bank that you can do, and it's just going to be a whole lot cheaper than a non-bank. But non-banks are great for their place and time in your business. That working as a non-bank, I always said to our customers, look, this is a short-term financing arrangement, and it was like 1 year, 2 year, 3 years. It gets them out of, well, it gives them the ability to grow or execute on the project that they want to execute on. Again, make sure the margins work, make sure you can afford it. And then hopefully they build up some equity or some further cash flow to be able to then transfer to a mainstream bank for that cheaper form of debt. The reason why we use debt is because it's cheaper than equity, but there's a point in time where that debt is a lot more expensive, and it may be cheaper to get more equity in to grow.
Are we starting to see non-bank lenders, the costs kind of coming down as we're starting to see more regulation in New Zealand around that space?
I'm not sure that the regulation brings down the cost of non-bank lending. I think the market brings down the cost of non-bank lending. So depending on how many non-banks are operating in the market, and then again what the OCR is, so we saw non-bank lending go up exponentially when the OCR was high, and we've seen it, coming back down again as the OCR drops. And the more non-bank players that are in the market lending money, the more competition. So it's just natural sort of supply and demand.
And you mentioned you were running a fintech practice. AI is playing a major role in all businesses in every sector, right?
Yeah.
Do you see the landscape of banking and financing for businesses changing with technology over the next kind of 5 years, and what does that look like?
Yeah, I think the landscape for banking is going to change 5, 10, 15 years. It's going to continue to change. We've seen a lot of change since COVID with technology, massive change. So we're in this another kind of big period of growth with technology, and AI is going to play a big part in that. What it is going to look like is beyond my probably wildest dreams to try and predict what that looks like. But I can see what I think the benefit can be definitely in the short term is that it means that we can use these tech tools to do our job faster, get back to customers faster, have more time to spend with customers. And I think that's very short term. But the more that we can use technology to do our job for us, the more time we can be out there serving our customers.
So that's really about adding value and optimising efficiency and processes.
Absolutely, yeah, yep. And we can look at a whole lot of other things within that as well. But your technology, AI, is about efficiencies and optimisation of processes in your business. Absolutely, it's all of that. And you'll see it. It's not just in banking; it's across the board in every business. We'll see what happens. I'm not too sure if I'd be comfortable with a robot doing my dentistry work, but maybe we'll have that in the future someday. Yeah. Interesting conversation though, because I've got a daughter at university and thinking about what sort of jobs are going to be there in the future. I think that's, and it's just so hard to know these days.
So another point that I'd like to talk to you about is around security and asset security. A lot of my clients that I work with, they're small businesses and they may have assets that they, for example, say it's a pinball machine, and they put that pinball machine in their mate's business, and then their mate's business falls over and goes into an insolvency process. They haven't registered a security interest over their pinball machines, and they've now lost their pinball machines.
Yeah.
time and time again, I talk to my clients around the importance of the personal property securities register and why you need to register security interest in these assets. Do you have a view on this, and how important is security?
So important. Banks aren't going to lend you much money, if any, without some security. And there's a reason for that. And that means that they are sort of first in line behind whoever's liquidating the business to be paid back the money that has been borrowed. So you want to be one of the first in line if a business is being liquidated. And whether it's your mate or whether it's another business, then you want to be up the curve, not there with all the other unsecured creditors. So, I guess for people that don't understand how it works, someone will come in and liquidate your business, and then you will, then the money's all in this pot, and then they pay the liquidator for their work, and then they pay the first ranked security, which will be invariably the banks or a non-bank, and then they'll pay, and they'll also pay out as per what's the security register. So if you've registered on the PPSA, you have an interest in the pinball machine, the money that is liquidated out of that pinball machine will go straight back to you. If you don't have that over the pinball machine, it goes into this big pool of money that's paid out to, it might be paid out to another secured creditor first, and then it's split between whatever's left over is split between all the unsecured creditors. And if you don't have anything registered, you're an unsecured creditor. And that's can put a huge amount of pressure on businesses. If you're already sort of struggling for cash and then a debtor doesn't pay, then it can make things a whole lot worse and have that domino effect.
So going slightly off track now, what keeps you up at night around some of the challenges your customers face?
Well, cash is king for everything, and I guess my wish is for my customers to think about that all the time, whether they're growing or whether it's stressful for them. I think all I want to do is help other people and their businesses. I'm very passionate about New Zealand businesses and helping them. And that's people really, because businesses don't run themselves. It's the people behind the business. So I'm passionate about helping my team and who I work with, and I'm passionate about helping our businesses. If I'm helping my team, I'm helping those businesses, so either directly or indirectly. And I think, the bankers I know, they're all the same. So what keeps me up at night is knowing about the stress that our customers are going through and wanting to help them. It worries me when they kind of push us back and don't let us in to try and help them, because we are there to help them. We've got no other sort of agenda there behind it. We care.
And just drawing on that passion, does that come from your childhood? Where do you get this passion to want to help these businesses?
Well, I grew up in Blenheim, and my father's an entrepreneur, and he started mussel farming in New Zealand along with a few others. And so I guess I've lived and breathed small business all my life. I know how hard it is. We had a year where we had no money. Mum and Dad had to live off their savings. Maybe too much information, but my mum made us undies to wear. And after that year, and we could afford knickers, we were like, we're not wearing these horrible undies ever again. Sorry, Mum. But, I was 7 years old, and I remember those undies, but I had to stop swimming lessons. There were no kind of extracurricular activities. So, and we just had to hunker down and do whatever we could to try and get through. And that was the whole family. So having worked in my father's business. I worked for about 5 or 6 years in a jewellery business while I was at school and in university holidays, selling jewellery. Again, that was just wanting to please the customers. I guess I've always just been around small business, and so that's why I'm very passionate about them and succeeding. And look at NZ Inc., passionate about New Zealand being an amazing country. I went overseas for 9-10 years, working over there and coming back. I'm here because I want to be here and I want New Zealand to be amazing. And it is amazing, but I also want New Zealand to be successful. And I don't like the poverty. I don't like seeing that stuff. We can spread that and help people. The more we can grow SME businesses in New Zealand, the more that we grow the wealth of everyone.
And off the back of that, what would be your top 3 tips for SME business owners to kind of get through the next 12 months as we progress through this current recovery?
Cash, and cash.
Mel, thank you so much for joining me today on the Fix and Fly podcast. It's been really great to have you on.
Oh, thanks, Larissa. It's been an honour to be here. Thank you so much.
Thank you so much for watching this episode. If you enjoy the Fix and Fly podcast, make sure you like, comment and subscribe and share with anyone you think will find this useful. We look forward to seeing you next time.